Hi guys, Kang here and welcome back to another episode on Stocks in Focus. In this video, we're going to talk about 3 stocks in total that I'm personally looking to trade and invest. And of course, if you're very new to this series, what we do on a week-to-week basis is every week, based on the earnings release, we're going to focus on some stocks. And in this entire video, we're going to share with you the entire process of how we analyze and make a decision whether to trade or invest in a particular stock. So without further ado, I'm going to share with you my screen and we're going to dive into the 3 stocks that we want to talk about in this video. Right, so the first stock over here you can see that we're going to touch on is Netflix, okay, and these are the stocks that are going to have their earnings report release this week. Okay, and Netflix is one of them. Okay, so Netflix, while it's important to watch the earnings. Okay, we look at it from a fundamental perspective as well as multiple factors, including technical and of course seasonal. Okay, so if you take a look at Netflix over here, okay, there are 3 fundamental drivers you want to consider and pay attention to. Okay, if you are aware of what happened in 2020, of course, with the lockdown and stay at home, subscription like Netflix, Disney Plus, of course, has increased in its users, in its customers. Okay, and Netflix has crossed 200 million users in 2020. But the question here is, moving forward, can it sustain its user database, right? Will we then jump from Netflix to Disney, or will we unsubscribe from Netflix? I think that's very important. Okay, and if you study the fundamental, the data, the financial statement of Netflix, you realize that Netflix as of now still have a negative cash flow, which is not something very positive. Okay, so it's important to monitor on this, on how Netflix can perhaps turn around from it. Okay, and you want to keep a lookout for what's going to happen this year. Okay, when things starts to open up, in terms of the economy, will Netflix still be able to maintain its user base? Okay, and if I will apply the scoring system based on the quantitative fundamental analysis that I personally use, okay, you can see over here Netflix give a total of 10 score, which is in the yellow territory. Okay, which is something that to me is not immediately a stock that I will invest into it. Okay, and if you take a look at the cash flow here, it's negative. Okay, not a very good sign. And that tells me that if I'm looking to invest, I will be very, very cautious. Okay, and more importantly, if you take a look at the dividends here, Netflix is actually not paying out dividend. Okay, and based on valuation, the 2 models that is perhaps relevant over here is, one is value investing, discounted cash flow, DCF valuation. Is it negative, right? Because the cash flow for Netflix is negative. Okay, it doesn't make sense for a positive valuation. Okay, so that's something you want to take note of. Based on Graham's number, the valuation is $49, and of course, with the current market price, Netflix is definitely overvalued. Okay. So if you ask me, it's definitely not a stock that I will invest in, but is it tradable? Okay, yes, you can still trade it. In fact, based on seasonality, okay, we do have a position running. Based on seasonality, there is a high probability that between 4th of December to 28th of February, okay, there's an 85% probability that the stock Netflix will rally. Okay, and for the past 10 years, the average return during this period is 26.18%, pretty good. Okay, and you can see over here, I'm in this position since the 4th of December, right? Simply based on seasonality. And right now, currently, I'm up by about 0.3%. It's more or less like break even. Okay, but I'm looking to hold on to this trade all the way until the 28th of February, and let's see how this trade will play out. Okay, so in short, I'm not looking to invest into Netflix. Definitely, it's not an investable company for me, but it's tradable. Okay, and if I were to take a look at this charts on, oops, that's a wrong ticker. Right, and if we were to take a look at Netflix chart over here, okay, at least on a daily perspective, you can see that currently Netflix is in a range-bound environment. Okay. With the current high at 575 and the lower range here is around $458 or close to $460. Okay, so since July last year until now, it has been in a range environment. Okay, for those of you who are trading the technical charts over here, perhaps you want to consider monitoring this key level. If price were to break off this high, perhaps that's where you want to enter a position, a buy position on that. Or for those of you who would like to scoop up at the bottom, perhaps the key level to monitor is about $459 or $460. Okay, for me, I'm not looking so much in the technical side on trading the stocks, at least for Netflix, all right. But I'm basing it on seasonal, where I share with you just now. Okay, we already have a position over here, and we're looking to exit, of course, hold this and exit on the 28th of February. Okay, now another stock that I would like to bring your attention to is Procter Gamble. Okay, in short, the ticker symbol is PG. Okay, it's not this company, I believe, right? Is not foreign to many of you who are in the stock market. It's one of the biggest company conglomerate that you'll be able to find. Okay, and what you need to keep an eye on, of course, for such a big company. Okay, we are talking about potential market share growth. Okay, so we are looking at competitions, whether P&G is able to increase its market share in the future, of course, this year. Okay, and what is the future gonna be like for P&G, especially with a potential lockdown and things like that moving forward in 2021. Okay, so you want to keep an eye on that. Okay, now if I put in this company into my quantitative scoring, okay, P&G score pretty good. Okay, it's at the scoring of 15 with a maximum in this system here is 21. Okay, and you can see 15 is in the green zone, which is to me an investable company. Okay, and what's important to me is that whenever I invest in a company for the long term, I would like to see that it pays off dividend. Okay, and if you take a look at here, the dividend that is paying off is $3.12. And the payout ratio is 56, so pretty okay, pretty sustainable, with a positive dividend growth as well. Okay, so that's very important to me. Okay, so what I did was I put in some valuation. Okay, whenever I looking to invest based on dividend, the model that I'll use is DDM. Okay, which is dividend discount model. And based on the valuation, it's at $74.22. With an expected annual return of 8%. Okay, so this is the valuation of it. Okay, if you compare it to the current market price, of course, it's overvalued. Okay, and it's not worth to invest with the current price based on valuation. Okay, but that does not mean that it's not a good company. That does not mean that you wouldn't want to invest in it, because it's already so popular. Okay, it's such a big company. Usually valuation might not be a fair thing to really base on whenever you want to invest in such company. Okay, because a lot of people are already buying into it, are investing into it. That's gonna push price up. Okay, so you need to give that you need to take that into account. Okay, and of course we take a look at seasonality as well. Over here, okay, what I want to bring your attention to is, if I want to invest into P&G for the long term, then I want to identify a period where there's a high chance the price of P&G will actually drop. Okay, because as a value investor, as a dividend investor, what you want to do is you want to scoop up the company. You want to enter when the price is low. Okay, so that not only are you gonna benefit and profit from the dividend, but more importantly, you can also ride on the increase in price as it goes along. Okay, so between this period where we look at seasonal trends, okay, between 18th of Feb to 23rd of March, there is a 60% chance that P&G is gonna drop by an average of 3.14%. Okay, so if I bring you to the stock chart on P&G, okay, you can see that right now we are in the consolidation zone. Okay, this is on the daily chart. And what I'll be interested to keep an eye on, if I were to put in some FIB and of course some of my simple technical analysis, okay, we are looking at this key area. Okay, let me just put this in as well, right? I'll utilize the volume profile indicator at the same time. Okay, you'll be able to monitor that this zone here. Okay, there's some key value and volume. Okay, at the same time we do have Fibonacci ratios coming in over here. So I would say somewhere around the region of $126. Okay, around that. And of course, if I just look at this, there's some key support resistance level as well. Okay, that will be a key area to keep an eye on. Okay, and if I were to put in, let's say we have an expected drop of about 3%, that would bring us slightly towards $130. Okay, so for those of you who are interested to keep an eye on P&G, I would say right now the valuation is definitely expensive. Okay, if you look back at the valuation based on the model that we calculated, you're probably not gonna get back at that level to invest in. Okay, so if you're basing it on technical, then perhaps the next best price for you to consider is somewhere around $126. Okay, and of course, just a quick disclaimer over here, I've already been investing in P&G since last year around March period, and my entry price was around $116. Okay, will I look to accumulate more of these stocks if it will come down towards 126? The answer is yes. Okay, P&G to me is definitely a solid company based on fundamental. It pays off dividend as well, and more importantly, there's a potential for its dividend growth. Right, so definitely one of the companies to keep an eye on. Okay, the last stock here that you want to pay attention to is IBM. Okay, and of course, some of you know that I've invested in Intel, and there's a lot of competition among these few companies, right? Like IBM, Intel, ADM, right? Some of the semiconductors, they are in this same sector or even industry, I would say. Okay, semiconductors, producing chips, and of course IBM here is more like electronics. Okay, so the idea on this is what you want to pay attention to in IBM is whether there will be a turnaround. Okay, why I say that is because the fundamentals performance of IBM is actually pretty bad. Okay, and the idea here is, will it be a turnaround potential play on IBM? Okay, so with that, I bring you to the quantitative scoring. Okay, so you can see that IBM is actually worse than Netflix. Okay, the scoring here is 7. Okay, what's bad is of course the change in cash is negative. In other words, that while IBM might be making money, right, it's burning its cash. Okay, and that's not a good sign for a company, because when there is something bad happen in the economy, okay, cash is very important for a company to survive, and if IBM keeps bleeding, okay, it's not something very good. Okay, and what you want to also take note of is that the EPS trend, which is earnings to price, is of course not very positive as well. Okay, it's actually falling. So based on the valuation model over here, if you're basing on value investing, which is DCF and Graham's number, okay, of course you can see this is the valuation, it's about $65. But if we base it on discounted dividend model, okay, because IBM do pay out dividend, annually it's paying out about $6.50. Okay, with an expected annual return of 8%, the valuation of IBM is crazy. It's at $234, right? But one thing you guys want to take note of is the payout ratio over here on IBM is already at 72%, which means that the upside potential for the dividend growth might be limited. Okay, so to me, with a scoring of 7, okay, it's definitely not a company that I will want to invest in because the fundamental of it is not very strong. Okay, and do I then look to trade it? Of course, okay, I'm still trading it based on seasonal trends. Okay, so it's very clear, if it's not investable doesn't mean that you can't participate in it. Okay, but you want to then trade it instead of invest into it. Okay, so IBM does have its seasonal trends. Okay, if you take a look at this over here, between 14th of November to 20th of February, there's a very high probability, in fact 100% for the past 10 years, IBM actually rallied during this window of period, 14th November to 20th of Feb. Okay, and the average return is about 7.65%. And I do have a trade since, of course, over here you see 16th of November because we are in the weekend, right, 14th, 15th. Okay, and right now to date this position is running about 8%, so pretty much around the average. Okay, and we'll see how far this can go. how this year it will perform by 20th of Feb. We'll exit this trade. Okay, so I want you to be able to see that while some companies are very popular, right? For example, like Netflix over here is very popular. IBM is also one of the very big company. Does not mean that if a company is popular, it's investable, okay? Because you also want to take note of whether this company is fundamentally strong. And the question here you want to ask yourself, of course, is if today you're going to invest in a company and you're not able to let go of it for the next 10 years, will you still be comfortable holding on to it? If it's not, it's definitely not a company that is investable. Okay, and to me, I have a system, okay, and this scoring over here, if it's something less than 15, and of course 15, what I mean 15 means it needs to be in the green zone, okay, 15 and above, that's investable. Other than that, it's not really. Okay, then what I'll do is I'll look to trade them based on seasonality. Okay, so I hope this video here give you that perspective, give you that insight. Okay, and hope you actually benefited from it. Okay, and of course a quick advertisement over here for those of you who like to leverage on and of course make full use of this seasonal trends. We do have a service that we provide with our community, sharing with them what are some of the stocks to focus for the week, what are the specific date to enter, and of course what are the specific date to exit. Okay, and it's less than $1.99 a day. Okay, you'll be able to find out about this service, this seasonal trade ideas more. Just go to our website, www.seasonaltrades.com. Okay, all the information are over there. Now, I hope you enjoyed that video and more importantly, you actually learned something from it. Okay, whether is it the opportunities to trade or invest in a particular stock, or is it, the many things that you pick up from the thought process, the system that we use. I think that's very important. Okay, and of course, if you have yet to like this video, I would really appreciate you do that. Okay, and if you have yet to subscribe to this channel, do that as well, and make sure you click onto the notification button, because every time we release a video, if you're on it, you'll be the first one to be notified and you will not miss out on any of the videos that we're gonna release and produce on this channel. Okay, and as usual, I always say, if you have any questions or you have anything you'd like to clarify on, feel free to use the comments below. Just type it in. Okay, I'll monitor them and of course answer your questions accordingly. So with that, I'll see you guys in the next episode on Stocks in Focus.